Hello and welcome to Zak's Traders Cafe. Today I'm joined once again by Christopher Nicholson, who's Managing Director at ACF Equity Research. It is Sunday, the 26th of October. We've gone into GMT, which is obviously the proper time zone and the world's leading time zone. In fact, there's only one time zone really, this one. Makes you proud to be British. That's all we've got left. I'm surprised they haven't changed that actually. Although it has to be said, I think we should stay in British summertime and the Scots, because they are obviously different from us. And I was born there, so I should know. They can stick with GMT all the year round, I think.
Yeah, I mean, you get those fantastic long summers, which would be even better. I mean, I certainly, I mean, I love the summertime. I wish we were light until 12 o'clock at night.
But I think they can stay. They can keep their own time zone because I think the reason we have to put our clocks back is because it would be dark at 9 o'clock or 9:30 in Scotland. But as they don't do anything there anyway, it doesn't make any difference.
Yeah, you could take that view. I think they'd probably argue that they do a few
They're
things.
in bed.
There's a
They're
lot of
in bed
farming,
at
for
that.
example.
They're in bed at that time anyway. They don't wake up until the pub's open. You know all that sort of stuff. You know what I'm saying.
I do. I
Plus,
do. I know where you're
plus
going.
all the
I'm trying to
separatists.
head it off, Zach.
Sorry.
I'm trying to head it off before we go too far down that
Oh,
track.
okay, okay. Well, no, no. If no, when Scotland becomes independent, I will be claiming my right to a Scottish passport. So what else can I say? It's a fair thing.
I mean, I shall probably, hopefully, they will do. If you've got parents or grandparents, in which case I shall also claim one. I've always wanted two passports, and for some reason, I don't know why, but I only have the one, unfortunately. So it'd be a great opportunity, yes.
Well, no, the only problem with that is that then you wouldn't get your knighthood, or there's a big chance that you wouldn't get a knighthood.
I think it wouldn't really impact the overall probability in a measurable way.
Well, unless you're Billy Connolly or Sean Connery. But anyway, let's go into the economics. But I did actually, and we sort of had a bit of messaging about J.P. Morgan talking about the gold price and coming up with some crackpot thing and everything else. There's always an investment bank that it steps in just when a market's at a peak or a low or whatever it is, and it's just basically a PR thing, and we all know it's a PR thing. 4,400 and they'll say 5,000 by the end of the year or 6,000 based on absolutely nothing. Is that your view, or do you think they actually contributed in a meaningful way to the debate?
I mean, I think if if you consider that the entirety of research contributes to the discussion, then I think it's fine for them to make the position and say, look, we think it's structural. Our number is X, but it's somewhere between, 3,800 and 4,200 feels like a structural number. In other words, we don't really expect it to fall back through the $3,000 level or the $3,500 level. And I think that's, respectable. It's okay. We've had gold sitting around doing nothing for a long time, and then the last 3 years, it's sort of woken up again, and headed towards its median, purchasing power parity, if you like, or relationship versus the dollar. So, in that respect, I would tend to agree with them that there is quite a good argument that gold has jumped up to a new structural level, and that's like.
Right,
Notwithstanding, as you say, that it's convenient marketing.
right. So when you say structural, I'm just waiting for you to finish, but when you say structural, or when they say structural, they're basically saying this time it's different.
I understand where you're going with that argument, but then the counterpoint to that is that if you ask, if they're saying, look, gold has revalued, it was due to revalue for a long time, it's finally caught up and revalued. We think that sort of 3,800 is the fair price under the current circumstances. We don't see much to change in terms of dynamics to push it down. And if it's caught back up to its median price or median purchasing power parity, then again, that gives us comfort that it should be. I'm speaking on behalf of them now, and I haven't read the note, but it gives us comfort that gold's not going to devalue the other way. that it's roughly where it should be, is what their argument is, and it should have been gradually going up over the previous decade when it hasn't. But that's very typical of commodities. They stay flat and then they jump, and then they stay at another level for not all of them, but for quite a lot. But certainly gold would be in that category, maybe silver too.
Right, the other thing this week that happened was that the FTSE 100 went to a record high by quite some margin. 96.45 was the closing level, up 0.7% on the day, in fact, and just through the roof. The government obviously hasn't mentioned the stock market at all. What I wrote just half an hour ago in my massively widely read weekly blog was that every point that the FTSE 100 goes up is a defeat for socialism and a triumph for capitalism. Is that your view?
Broadly, yes. I mean, yes, it is, because I suppose the counterpoint from a socialist perspective is that, well, look, we're going to do all these things to level the playing field, to provide an effective but expensive social welfare network that prevents people falling through that net into absolute poverty, and the market's still growing. We've told everybody that we're going to borrow X billions. There have been arguments at how we're going to pay for it, but in the end, the equity markets at least are signaling that somehow we will manage to pay for it, and we're not going to impoverish everybody. So that is how that. If I was them, that is how I would use that argument,
Well, no, but
because I
it must be,
think
yes.
digging into it, into what's really going on. Yeah, go on, Zach.
Well, no, I think the unfortunate thing there is that the FTSE 100 is mostly, overseas earners rather than British earners. So that is the explanation for the FTSE going up. In fact, the deliberate destruction of the UK economy makes the FTSE even more attractive, really. So, off you go. So that's one issue. But the other point, I suppose, we've discussed it before many times. I continue to get pleasure from it. Is that obviously you destroy the economy so that you put people on welfare, so that they have to vote Labour. So that's their only goal seems to be to get people to vote Labour. It's nothing to do with the economy. It's nothing to do with raising money. They'll borrow more money anyway to buy those. They're buying votes. It's simply buying votes. Whereas Thatcher bought votes by selling council houses and creating, property owning and also giving away shares free. So the gerrymandering's happened on both sides. I don't want to be fair, but one has to be fair in these situations. But the damage done by Thatcher giving away the family silver is probably less than the damage caused by that we're having at the moment, and that basically, I think actually the way it looks is that the taxation is not to raise money; it's actually just to confiscate wealth. That money could be sent
So,
anywhere. That money it could be sent anywhere. They send it to. I think there was a story today about 100 million going to the country of my parents' birth, Pakistan. 100 million pounds for contraception. So, what is that they're literally, and the Chagos, obviously the 30 billion. They don't have, I mean, it's amazing that we've got so much money that we can't even throw it in the bin over here. We've got to throw it in the bin somewhere else. I mean, that's almost a positive actually, that they can't even think of where to throw that money, and there's still money there to throw away. So the whole thing, but I think the market and people are still behind the curve on exactly what this government are doing. They think the government's stupid and or negligent, and actually it's brilliant at what it's trying to do. The only thing which is interesting is I think inflation didn't go up and growth hasn't gone into recession. So they're sort of thinking, "Hey, well, this is not working. This destruction is not working. What can we do? Oh, we've got the budget next month. Surely we can think of something. Raise national insurance again. I mean, they're almost desperate to come up with something to destroy the economy. Maybe they'll ban people from going to work, or I don't know. I mean, what is? And even the strike, actually, I think the tube strike last month, it didn't affect retail sales. They actually went up. They're at a 2-year high. So it must be very irritating. We're trying to destroy. I mean, we're strong. This is a strong economy. It's fantastic, really.
Okay, so let's just first of all, on the Thatcher side of things, I don't think she sold the family silver at all. People always give the railways as a very bad example of denationalisation, but I look back at the railways and I worked on one of the most innovative projects in railways, which was the construction part of Eurotunnel. And my experience of railways is that when they were in national hands, they were, I mean, the rolling stock was absolutely appalling. The journeys were extremely uncomfortable. All of that has changed. And that is only because of private investment. That was never going to happen under a nationalized system. We'd had 50 years to do that, and nobody did anything. And then it changed. Yes, there are lots and lots of problems. Some ways in which the railway was split up, undoubtedly problematic. And as a country, we are appalling at long-term big infrastructure projects, whereas the French are excellent. And I maintain to this day that the only reason that Eurotunnel actually got built was because we had the engineering and the creativity, but the French know how to get these projects through. And if it had been a solely English project, I doubt it ever would have been built. So that
It's
is
the
to say
first
that
positive thing
I
I've heard
don't.
about the French in my 59 years, I think, actually.
Well, I give them always give them credit. You know, if you had to sort of do that silly kind of assessment of who's good at what in Europe, I would make the French in
Waterloo.
charge of all big infrastructure projects. Yeah, I put us in charge of the army probably, but I would put the French in charge of big infrastructure projects. Yeah, but I mean, it's a very simplistic
Yeah.
assessment, obviously. And then coming back to Labour and what you were saying, yes, I mean, this is always socialist policy. Break up the family unit, make people dependent upon the state, ensure that you have political power, and then you have a chance of doing your big experiment, which goes, essentially
You see,
tends
but it's not an
more and
experiment.
more
All you're
left wing.
doing is buying votes through taxation. That's all you're doing. You're just buying votes.
In order that you can then do the big experiment, because currently the Brits would not vote for the big experiment of communism or a version of that.
Uh, as far as what you've been looking at in the markets this week, what's the ACF view been this week?
All right, so I think on gold. So here's what we'd like to say about the gold price. I think so. Little explanation on what's been happening and therefore what to watch. So clearly some profit taking makes perfect sense to do. In combination, you've had a slightly stronger USD. So that means that for international buyers, gold is more expensive. So that takes a little bit of demand out of the market in itself. Geopolitics. So the three big items I would argue that will come to most people's minds would be Russia, Ukraine. You've got China and US trade war, which seems to be manageable and less scary. And then we've got Israel Palestine, where you could either call it a breather or a truce, whichever way you want to look at it. But there is some progress, and so a little bit less geopolitical tension. So then gold as a risk asset is, safe haven asset, sorry, slightly reduced. US economic data has come out on that. We did get the CPI yesterday, much to my surprise, frankly, but we got the CPI a little bit cooler than anticipated, but it's marginal. But what you've then got is softer inflation, so rate cut has a higher probability, and I think it's 98% now. Traders are saying at the end of the month they're expecting a 25 basis point US rate cut, and so there's a lower opportunity cost for holding interest-bearing assets, sorry, holding gold versus interest-bearing assets. So that's actually a positive for the gold price. I think you need to watch for ETF outflows, which we had a lot of. And then in terms of the gold price going back up, to simplify it, three things to look at: central bank buying, keep an eye on that. Look out for the USD, which way is it going against basket of currencies? And then you've got to keep an eye on the inflationary macro data in particular. So I think that sets the platform. Our overall view is we are reviewing our $4,000 target, but currently the team is sort of drifting is kind of they're comfortable at 4,000, and that's what we should stick with, and we should work on the 2026 forecast. So that's our gold thing. We've got a few companies we can talk about in the gold-ish space if you're interested in that, Zach.
Let's go ahead. Go ahead. I mean, I've had my rant.
Okay, so we'll do that. All right. So there's four we'd like to kind of point to. If your thing is large caps, and we tried to go global, but it hasn't quite worked out the way we wanted. But let's start US Nasdaq listed. We've got Perpetua, which we called at $2, is now at $23. So that's about 3 years ago. So, it's up 1,000% or 10x, 10, 11x, 11.5x to be exact. Um, However you look at it. Gold and antimony. The valuation is really based on the gold asset, which is in Idaho in the US. The strategic story is antimony, so they've got upside both ways there. They've got the bullet side for antimony, so Department of Defense has been talking to them. They've also done a deal with Japan as well recently with the Japanese government, which has helped enormously. And antimony is also a technological solution to utility scale batteries. Another bugbear of yours, I know. But there are many solutions to utility scale batteries. Antimony is one. So you've got both, it's popular during peacetime and it's popular during times where you think you need to up your defense spending. So we love that story, but it is now, it's a by UK standards, European standards, it's a small large cap, but it's entering towards mid cap territory by US standards. So three others that we're kind of having more of a look at. Sarabi in the UK. I know, Zach, that's one that you are familiar with. And I have to say thank you to you, actually. We started having a look at that. So 195 million market cap, UK listed, Brazilian assets. It calls
So that
itself
yeah,
a
I mean that
multi-asset business.
what I like. I mean, I'm more like a mini micro cap. One of those under 50 million, under 20 million type person. But
Mm,
it's interesting that just with this gold rise, companies like Thor Explorations or Sarabi and ACG Metals, there's a few who seem to be making crossing the Rubicon of going from being small cap to being mid. And that is actually quite exciting. I think if I was starting again and actually hadn't done all I'm doing and just was just an investor, which is rather tempting now, then I would be looking for the companies that are going to go from 150 or 2 million, 200 million to half a billion, and trying to find them just as they're getting on that runway. And I think that's, because I think ACG's done that, Thor's done that. And you can sort of see when Thor went through 2030p, it was just kept on going because then they attract they attract proper institutions then, right? So
mm.
that I think if there was a trick, and I've seen that with one or two people I know who are now very rich who don't talk to me anymore because they've got rich. But they've gone for those sorts of companies, so that whether it's I don't know, like Gulf Keystone or in the oil area, you've had companies who've transformed like that. I think there may be Arrow Exploration, which has probably done the worst PR any company's ever done in the stock market. But that looks like the one that once the share price goes back to it's now 11p, they managed to get it right down. But once it goes to 2030p again, that will probably mean that it's going to have its 10,000 barrels a day or 3,000 or whatever. There's a certain amount of barrels and there's a certain amount of production that you get into that mid cap space, right?
Yeah, I mean, I would agree, and I think that's where you want to go. In the US, it's a very different scale. So Perpetua at 2.5 billion it would be the equivalent of your play. Here, going from 100 to 500 million
Mm.
is the reality of those things. I think Sarabi is, it's really interesting. The operating base is really interesting. The 2025 guidance of ramping up production 70% or so, I think, is what they've said is very interesting. The Karinga permitting as well, and that just the entire kind of growth narrative with Sarabi would, from a fundamentals point of view, would also put it in that basket that you've just described. And so it's an interesting company. We have not commenced coverage on it at this point, but we are looking at it, and we think we're pretty clear on what the investment case is. I think, and also, there are risks as well. There's permitting timing. It's they call themselves multi-asset, but both assets are in one country, Brazil, and clearly the gold price is absolutely in the right direction at the moment, but still you have cost sensitivity in these things. And then there's royalty risk as well on some of these things. But you've got to say those things. But overall, there's a very positive story there at the top level, and it needs digging into, which is what we're looking at whether or not we should do.
Right, there's a couple of things I wanted to talk before we head off into the Sunday brunch zone. The first one is obviously I've known you for 5, 6 years, and it feels like longer, but I've learned a lot from you because you're one of the few people I look up to, and no, well, largely because you know more than I do, which is irritating, but you do,
Not
and
always
and
true, Zach.
and
Not always true.
so I know that if I was looking for research, either my company or a future company, when my companies get into the FTSE or when they become successful, I would choose you and choose you by a mile. But you still have, I mean, you still have, I mean, I hear these horror stories of companies, they just go for, oh, an expensive research outfit, is reassuringly expensive, or one that nobody's heard of, or one that, I mean, it could be anything because it's even worse than PR. Companies don't know what they should be looking for. It's a box tick exercise. And yeah, how do they find you? And how do you sort of find them? So Sarabi should be a client of yours. In fact, just off the back of what we've said and my charting of the company, they should be saying, you should be watching this and saying, right, I'm signing up to ACF. They've already doubled the joint coverage for free that's been done has already doubled or tripled our share price. Obviously, the gold price has gone up as well, but we've shone a light on the company. That's what it's all about. Shining a light and explaining the investment opportunity is what it's all about. And I think I'm one of the best in the business, and what you do in your area means that you're one of the best in the business. But how do you actually, uh, you know, get that message out? Because I've seen car crashes, and I still see companies who get research off, so because the broker said it, or somebody else said it, or because they needed the money, or whatever it is. How do you get yourself out there and show that you're not a scuzzy sales and marketing outfit, which I feel that most of the companies are, most of the offerings are, big or small?
So I think you raised three really good reasons, really good things there, and I'm going to try and address them all really quite fast. So first of all, there is a misunderstanding with small and mid-cap companies about the role of broker research. Broker research essentially complements the kind of product that we put out. So we do work together, but the backbone of quality research that tells a story, it means it has to be consistent to de-risk, okay, over time. That's what part of what it's all about. The brokers then come in when there's a deal, when there are high volumes, and add to that momentum. But this is the reality. The brokers plug into what we do, not the other way around. And we find in the US that actually we begin to lead the story over time. Because it's easier and the brokers are motivated in a different way, and then they come round. The other thing is the broker research, there are very honourable exceptions, and the analysts in the firms are not trying to do this. But for the brokers, the model is such that the temptation to drive to lowest common denominator, lowest, lightest touch research is very, very strong. And that does not move prices. Or if it does it for a
Well,
very
yeah, but
short
what
period of
about,
time.
the cheapest one or the one where they've been like, we'll double your share price or we'll do that. So it's either the cheapest or the biggest
I mean,
the biggest
what's
bullshit,
cheapest? If
the biggest bullshit associated with the thing. So it's a sales and marketing thing, that kind of thing.
Well, I think you have to what has to be assessed is if it's cheap, what damage is it doing? So, it might appear to be cheap, it might even appear to be free, but you have to ask yourself the question, if it's cheap and if it's free, what is it doing? What is the brand reputation for the business? But more importantly for small companies, what is the brand reputation for the management team? And if those management teams have any desire to go on and do something else, they need, it doesn't matter what, in whatever space, they need to think quite strategically about that. So I would say the way that you go around picking a good research house is having that conversation with the team. What's the philosophy? Noticing things like this that we're doing, where I don't get to hear what your questions are in advance.
I know
So
you wouldn't be
watching
here
what
otherwise.
they well,
You wouldn't
there we
take the
go.
call.
So what? So watching what's going on, having those conversations, understanding if that team takes a strategic view, and how important is the independence part? Because in the end, the company needs to invest in the independence part because that is what drives the price. People think, okay, these people are at least trying to do a decent job. Portfolio managers, institutional portfolio managers, if you are thinking you have an aspiration to begin to get them interested in your company, they are extremely cynical about broker research. Most small cap broker research they see as only being produced to market a deal, and then it's switched off again. That drives them insane.
Yeah, so I
And
mean,
it's
I
not
would
how
say
you get
on
something.
that front, that it's very easy for me, having been in the market for so long, I can judge a company by its research note and who they've chosen, the service, but obviously their broker, who's just raised the money, and also by it's obviously for me, it's their PR company. It's like, oh no, you didn't go for them. They've got three followers. The guy who interviews you doesn't know anything about your company at all, and you just fell for that. I mean, it's just like, oh. Or, I mean, it's that bad. Or they took you out for lunch, or you fancy the PR person or something. I mean, it's just a horror story after horror story. I mean, just
Yeah. One,
flattered
one
by
in,
flattered by that. And
and
so I mean, if anybody wants a list of the companies I think, oh my God, they've been suckered, I'm delighted to be delighted to send it on. And obviously it would be sued and everything else, but who cares? But the point there is it is like that. If you're in the business and you've just put your company associated with that, you judge somebody by the company they keep. So I'd rather it's just like in this exercise, I'd rather do a video cast with you for 40 minutes that three people listen to than do a video cast that a million people listen to with a complete bozo. I'd rather do that. And I think that's
I'd like
this.
to
And
get more
and
from
I
people.
know that this is the best quality. I mean, every single, rung the bell on every point, but you did very good answers to very difficult questions that other people wouldn't do. So people can see that you know what you're talking about, and they'll learn something. So so that's
On
that.
that
I just
note,
yeah.
Zach, if that's the case, one point I would like to make is that investors at how research is being funded by the companies. If a company is paying via stock, investors have to come to the conclusion that there is no way on earth that that can possibly be a dispassionate product. Also, where's the motivation to do coverage on a consistent basis that investors need? Broker research, they have to understand the mechanism. It's not about the analyst who intend to do better. But the mechanism is such that for smaller companies, it's coverage when a deal is coming up and then it will disappear. So it is marketing product. It has a role, it is important. The only people really who should be taking positions in companies as a result of deal work are corporate finance teams. That is it. Research has no business taking stock in a company it's covering, none whatsoever. And investors need to ask that question to companies.
All right. Finally, and I know we've got more to talk about on that, but I'm sure we've got plenty of time because that can be talked about any week. Finally, this week I met a god, probably one of the greatest gods, Dr. Arthur Laffer. I think I shook his hand. I can't quite remember, but I was so in awe. I can't
Oh,
remember
did
exactly.
you?
There was an event in
Of
London,
tax
and
fame?
just for a change, I was actually invited to, because normally anything good I'm not invited to. So that was great, and he talked about all the. I mean, he's been with Trump and Thatcher and all the other people. Talked about how clever he is, which he is. He's got his own I suppose what do you call it, a theory, or what do you call it? I mean, it's just fantastic, right? I'd love to
Do you
have,
mean
for
the
instance.
Laffer curve? We are talking about the Laffer curve, are we, Zach?
Exactly. I would love to have a mere angle or a mere square or a mere triangle, but he's got a curve and he's a hero. But the point here is that he was saying, and he said it, I think he said it on the Telegraph and other places as well, sort of saying, well, obviously he's got that sort of that level of which, you raise taxes beyond a certain point and then the take goes down. Well, obviously from earlier in this recording, we've established that the purpose of this government is not to actually raise tax. It's just to to destroy wealth. And in fact, if the level of tax was 38%, which is after which the take goes down, they're not bothered by that. They're just trying to confiscate that money. So in fact, they will never have tax below the optimum level of raising money. They will always have it well above that. So they say our minimum, say if it was 38% on the Laffer curve or 28%, but they would make
Mm.
sure that in every single metric, it was never any less than that amount. Has to be a damaging amount. So thank you, Dr. Laffer. Our tax levels will always be higher than the level that you've prescribed in your curve. And so that's one thing. And then the other thing, actually, his main thing is to say, uh, if you raise tax on cigarettes, then obviously you're expecting more people to give up smoking. And if you have speed limits, you're expecting people to drive slower and everything else. So how come if you raise tax on working people, how could you get more growth and more and people to do more, right? That's not actually part of the Laffer curve. It's actually a different, it's a sort of almost like a political ideology there. And I would actually say, and because obviously I'm even cleverer than he is, that in fact there are instances, and in the instance of raising tax and the levels we have, people are being forced to, people of a certain type anyway, are being forced to do more work. They're being forced to, if it's a couple, the wife has to work. If, whatever it is, you have extra people, you have to do extra work to make sure that you get your 5 grand a month between you that you need in order to survive. So I think that in that sense, actually raising tax is not necessarily a negative in terms of growth. And in fact, there could be a Zach curve in the sense that once you put it up to a certain level, people actually have to do stuff. I mean, maybe one of the reasons the stock market's going up is because there's no other place to make money. You can't set up a pub, you can't set up a business. So why don't you just take a ride on Unilever and Glaxo and the other companies like that? So I was actually say between 40% and 60% tax, actually you make some people work more than they would have normally. It's actually an incentive. It's a forced incentive to actually work more. But as we got less than,
I
but
would
as we
have
got
to
less,
debate that with you.
unfortunately, Christopher, we got less than 1 minute, so I'll have to say goodbye. You can think about it the next week, over the next week, and I'm sure we'll have lots of letters and postcards coming in on that subject. On that subject. In the meantime, Christopher Nicholson, Managing Director at ACF Equity Research. Thank you very much indeed.
My pleasure, Zach, as ever.